The world drowning in oil, anatomy of a global energy collapse. The world stands at a precipice of an oil crisis unlike any other in modern history. More than 1 billion barrels of crude oil now drift across the world's oceans, waiting for ports that can no longer absorb them. Tankers crowd the sea like steel islands, their hulls filled with black gold that has suddenly become a burden rather than a treasure. The International Energy Agency (IEA) warns that this oversupply is not a passing imbalance but the prelude of a structural rupture in the global energy markets. The estimated surplus of nearly 4 million barrels per day forecasted for 2026 marks the largest annual glut in recorded history. At the heart of this calamity lies a perfect storm in excessive production and striking demand. An alliance of oil-producing nations known as OPEC Plus, led by Saudi Arabia and Russia, has undone years of production restraint in pursuit of short-term revenue. Since mid-2025, member states have increased output by over 1.5 million barrels per day, unleashing a flood of supply at a time when global consumption is losing steam. This rationale behind this aggressive expansion was simple: protect market share, generate cash flow, and preempt future competition. Yet the gamble backfired. Instead of dominance, OPEC Plus finds itself presiding over a market collapse that may permanently undermine its influence. In the United States, the shale industry, once a symbol of technological triumph and energy independence, faces existential peril. Shale wells, with high decline rates and steep operation and operating costs, are unprofitable below $60 per barrel. At current prices hovering around 57 and projected to fall to 46, the industry teeters on bankruptcy. Rigs stand idle across Texas and North Dakota, while thousands of workers have already exited the fields. Bankruptcies and consolidations are inevitable, echoing the 2014 shale bust that reshaped the American oil landscape. Meanwhile, Canada's oil sands, though structurally resilient and capable of producing profitably around $50, are not immune to this to this contagion. The massive open pit mines in Alberta continue to operate, but margins have thinned to the bone. The once booming northern energy towns are now surviving in a state of cold endurance, functioning through momentum rather than optimism. The demand side of the equation reveals an equally grim picture. China, the world's largest importer and once the engine of global commodity consumption, has slowed sharply. The era of double-digit industrial growth is over. Its oil demand has weakened due to slower manufacturing, reduced export orders, and a domestic shift towards electric mobility. For much of 2024 and early 2025, Beijing's aggressive stockpiling masked the global surplus as Chinese storage tanks absorbed millions of barrels. But even China's storage capacity has limits. The government has since scaled back purchases. The result is a surplus that has nowhere to go. That 1 billion barrel backlog floating at sea is a momentum and a monument to a system that has lost equilibrium. History offers a sobering perspective on this cyclical catastrophe. The world has faced oil gluts before: the 1980s, following the Iranian Revolution and energy conservation boom, the 2014 shale oversupply, and the 2020 pandemic collapse. Each episode exposed the same fundamental flaw: the inability of producers to align extraction with real demand. Yet the 2025 crisis differs in magnitude and context. It unfolds in an era where renewable energy is gaining irreversible momentum and investors are turning away from hydrocarbons as financial risks grow. The global financial system, once dependent on oil as a pillar of growth, is now transitioning towards technologies that render fossil fuels less indispensable. As a result, the market cooperative mechanism where prices fall, production slows, and equilibrium returns may no longer function as it once did. The geopolitical consequences of this crisis are profound. Petrostates built on hydrocarbon revenue, Saudi Arab, Russia, Iraq, Venezuela, and Nigeria now face fiscal implosion. Their budgets, calibrated for oil at $70 or $80 per barrel, cannot withstand sustained prices near 40 or lower. Subsidies, social programs, and sovereign wealth funds will erode rapidly. Political stability, often bought through generous public spending, will come under threat. In Russia, the ruble has already depreciated amid declining export earnings. In Saudi Arab, Vision 2030's diversification efforts face a severe liquidity crunch, forcing the kingdom to reconsider its foreign investments and mega projects. Across oil-dependent nations, the illusion of perpetual wealth from the ground is dissolving into panic. The paradox of this collapse lies in the divergence of pain and pleasure across the global economy. While producers crumble, consumers in import-heavy nations like India, Japan, and much of Europe celebrate low prices. Transportation costs decline, inflationary pressure eases, and households' purchasing power strengthens. Yet this apparent boom conceals a deeper systematic threat. This deflationary spiral induced by cheap energy can undermine global investment confidence, reducing capital flows to emerging markets and destabilizing financial systems reliant on commodity-backed debt. What appears to be economic relief for some could evolve into a liquidity trap for all. In the financial markets, oil's fall has already triggered chain reactions. Hedge funds with heavy exposure to energy derivatives are facing margin calls. Stock prices of major energy firms have slumped, erasing billions in market capitalization. The crash echoes through shipping and insurance sectors as tankers charters plummet. Meanwhile, refineries, once bottleneck in supply chains, are running below capacity, unable to process the excess crude. In essence, the entire energy value chain has seized up, a global energy running at full throttle even after the destination has vanished. Beyond the imaginary shock, the has severe consequences. The energy transition that government once framed as gradual evolution may accelerate dramatically. As fossil fuel profits vanish, investments will migrate into renewables by necessity rather than ideology. Solar and wind infrastructure, already competitive in cost, now appear irresistible to both states and corporations seeking stability. The symbolism of crisis is clear. While tankers drift aimlessly at sea, wind turbines onshore continue to spin. This transition, however, is not painless. The erosion of oil's geopolitical importance will rely on power structure across the globe. The Middle East, long sustained by hydrocarbon leverage, must reinvent itself economically or face social fragmentation. The United States, while cushioned by diversification and financial depth, may see its once valued energy independence narrative evaporate, and China, as both a leading importer and green technology manufacturer, stands to consolidate strategic control over the next phase of energy history. The tectonic plates of powers are shifting from old kingdoms to technology empires. As the decade advances, one truth becomes inescapable. The era of easy oil is ending, not because reserves are exhausted, but because the economics that sustained it are collapsing. Price volatility will remain, but structural demand for oil is peaking. Every barrel extracted now carries diminishing strategic value and increasing financial costs. For the first time in history, abundance, not scarcity, has become oil's greatest curse. When historians look back at the mid-2020s, they will likely see the oil glut not an isolated economic event, but a civilizational pivot. The sight of a billion barrels drifting across ocean will symbolize more than oversupply. It will represent the twilight of an age. The old world built on fossil wealth is dissolving in real time, and from its disintegration emerges a new world order powered by the combustion, but powered not by the combustion, but by the light and wind. Whether humanity manages that transition, will foresight or stumble through the wreckage of its own abundance remains to be seen. But the verdict of the oceans, heavy with unneeded oil is already clear. The balance of powers has already shifted forever.